Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from Miami at ETF and Exchange Experience, where we're meeting with the top thought leaders and innovators in the ETF space. Joining us for this segment, we have Deborah Fuhr. She's the founding partner and managing partner at ETFGI. We're going to cover all of the ETF trends that we're hearing out of the conference this week. Deb, it's great to see you again. Welcome back to Trade Talks.
Thank you so much.
And we have a lot to get to, but I want to start with what you've seen for the first quarter in terms of flow trends.
Yeah, so what we saw is the trends are really doing quite well. They're not records, but we've seen $305 billion of net inflows globally going into ETFs. And so what we're seeing is a lot of money going into equity still, but a little pickup into fixed income, and we are seeing investors going into commodities. So we see the impact of what's happening in the Ukraine impacting investors thinking about commodities, thinking about gold as being a safe haven and an inflation hedge, because clearly inflation is on people's minds, but definitely more into equities and a lot of money going into the US market.
What about ETF usage? How are advisors and investors using them?
What we are finding is many investors are using them to create model portfolios today. So a lot of them are thinking about how should I modify my asset allocation to invest. So they often are doing equity, fixed income, looking at alternatives, looking at the ability to invest in crypto that's now available here in the US, although it is using futures and not spot. I would say gold is another one, but themes have become popular too. So people want to be able to invest in disruptive technology, clean energy, solar, things that they think will be doing good for the world and for the economy. And so we see investors putting money into those types of exposures also. Anything
interesting on the regulatory side?
You know, especially here in the US, I want to raise awareness because I talked about ESG, I talked about fixed income. FINRA's Rule 2208, which is out for a consultation and comments are due by May 9th, is very broad and sweeping in how they are thinking we might classify complex products. So it might include all commodity products, it might include all emerging market products, it might include anything that is ESG or non-market cap. It would include all ETNs, closed-end funds, and it applies to these types of products in mutual fund wrapper and ETFs. And so basically, if it was passed, they might say, you have to have a high net worth of X to be able to buy these things. You might have to get trained and pass the test to buy them. You might have to sign more onerous forms, or you might be prevented from buying them. So I think this is really important. So what I would suggest is you should go to the FINRA website and provide a comment. Even if you're a retail investor using these products, they should hear from you that you feel you understand these products, find them valuable, and want to be able to use them.
It's interesting because it felt as if the industry was moving away from accredited products and allowing for more liquid and availability to retail investors and to advisors to democratize access, if you will, for a bit. And I know democratize is overused these days, but to revert back to more of an accredited mindset seems as if it's a big 180.
It is, because normally it's based on disclosure. You read the disclosures and you can invest. And we know that they're also trying to provide exposure to private markets. So I do find this very interesting that FINRA is doing this, not the SEC. But it is a very big change, and I think a lot of people have missed this because they thought it was only covering leverage and inverse products, which many would say, okay, that is complex, right? People don't understand it. So I would say, please do take a look at this.
Is there a high probability of this going into effect, or is it still early days and you have to go through the comment period first?
Well, the comment period closes May 9th, which is why I'm saying we should respond. And then it could be moved pretty quickly and put into law pretty quickly by FINRA. So I think we need to pay attention to this and react.
Well, thank you for bringing it to our attention, Deb. It was great to catch up with you. Thanks for joining us on Trade Talks. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.